Listen-only mode.
Good afternoon. Thank you for joining us today for this NZASB webinar on the Disclosure Initiative Principles of Disclosure project. Lisa Kelsey, a project manager in the Accounting Standards team, and I, David Bassett, a deputy director, will present today's session. Before we get started, I would just like to highlight that a link to the recording of the webinar and presentation slides will be emailed to participants tomorrow and made available on the NZASB website. During the course of the webinar, please feel free to submit questions. We will try to answer as many questions as possible at the end. However, those questions that require a more considered response will be collated and we will answer in an email to all participants. Okay, so in late March, the International Accounting Standards Board, or the IASB, issued the Principles of Disclosure discussion paper, or what Lisa and I will refer to today as the POD DP. The DP ultimately seeks feedback on what the IASB has identified as the disclosure problem and the IASB's preliminary views on how to address the problem. Before we get into the details of the discussion paper, I'd just like to provide a short background to the POD project. The POD project is one of several projects in the IASB's Disclosure Initiative. The IASB launched the Disclosure Initiative back in 2013 in response to feedback received that there was, or still is, a need to improve the effectiveness of disclosures in financial statements. The Disclosure Initiative fits into the IASB's focus for the next 5 years on better communication in financial reporting, which is a central theme on the IASB's agenda that came out of the agenda consultation process. The Disclosure Initiative, which primarily looks at improving disclosures and the notes to the financial statements, sits alongside the Primary Financial Statements Project that looks at potential improvements to the structure and content of primary financial statements, and the IFRS taxonomy, which enables electronic tagging and electronic reporting of IFRS information. In addition to the POD project, there are 3 other current projects in the Disclosure Initiative, being the Materiality Project, the Materiality Practice Statement Project, and the Standards Level Review of Disclosures Project. Under the Materiality Project, the IASB is developing clarifications to the definition and application of materiality. Under the Materiality Practice Statement Project, the IASB is expected to publish a materiality practice statement in the next few months on making judgments about materiality in the financial statements. And finally, under the Standards Level Review of Disclosure Projects, the IASB will look at potentially developing a drafting guide for when it is setting disclosure requirements, and this may result in reconsidering existing disclosures for improvement. It is also worth noting that there are 2 completed projects in the Disclosure Initiative, being the narrow scope amendments to IS1 issued back in 2014. These were to help entities applying judgments when preparing their financial statements, and amendments to IS7, which requires the disclosure of change in liabilities arising from financing activities. Based on research activities and outreach, the IASB has heard that there are 3 main concerns about disclosures in financial statements. These being that there is not enough relevant information being provided, irrelevant information is being disclosed, which is often referred to as the disclosure overload, and relevant information that is provided is not always effectively communicated. Now, the IASB considers that difficulties in applying judgment about what information to disclose in the financial statements and determining the most effective way to organize and communicate information as being the main cause of the disclosure problem. The IASB has observed that some entities, auditors and regulators seems to approach the financial statements as compliance documents rather than as a tool to facilitate communication with users. This approach can be seen to have resulted in a checklist approach to disclosures, without entities applying judgment and determining what information is relevant to users. We'll now have a look at the objectives of the Principles of Disclosure project discussion paper. So the IASB believes that the development of clear disclosure principles governing what, how, and where information should be disclosed in the financial statements will improve the information provided to users of financial statements. As part of the POD project, the IASB seeks to help entities apply judgment and communicate effectively, help users by improving disclosures in financial statements, and help the IASB improve disclosure requirements, for example by providing guidelines for improving disclosure requirements and standards. Ultimately, the suggestions in the DP may lead to amendments to parts of IS 1 or the issuance of a new standard to replace parts of IS 1. The DP could also lead to the development of supporting guidelines and/or educational material. Now, as mentioned previously, the DP seeks feedback on approaches to address disclosure issues identified by the IASB and whether there are any other disclosure issues that need to be considered. As an outline of the DP consists of 8 sections and 1 appendix. Section 1 provides an overview of the disclosure problem. Sections 2 to 8 tackle disclosure issues and consider proposed disclosure principles to address those issues. The chapters are organized around disclosure principles as set out on slide 10. Okay, so we will now explore the sections of the DP in a little more detail. Section 2 of the DP, Principles of Effective Communication, explores the issue of ineffective communication of information in the financial statements and how this can make financial statements difficult to understand. The DP identifies 7 principles of effective communication, those being that information should be entity-specific, clear and simple, organized to highlight important matters, linked to related information, free from unnecessary duplication, comparable, and in an appropriate format. The DP seeks feedback on these principles and whether these principles should be described in non-mandatory guidance or prescribed in a disclosure standard. Section 2 also considers and seeks feedback on formatting of information in the notes. The IASB's preliminary view is that non-mandatory guidance should be developed covering different types of formatting, such as narrative text, tables, graphs, etc., and when certain types of formatting are more appropriate than another. Section 3, Role of the Primary Financial Statements and Notes, considers concerns heard by the IASB that entities have difficulty judging whether information should be provided in the primary financial statements or in the notes. The discussion paper proposes that the statement of financial performance, statement of financial position, statement of changes in equity, and statement of cash flows be termed as the primary financial statements. The DP considers alternative terms such as the face of the financial statements or core financial statements. However, the IASB's preliminary view is that a general disclosure standard should specify that the primary financial statements are those statements excluding the notes. The DP also proposes that the role of the primary financial statements and the role of the notes are defined. The IASB considers that this will help entities determine whether information should be presented in the primary financial statements or disclosed in the notes. Section 3 also notes the IASB's preliminary view that going forward it will specify the intended location for information as being in the primary financial statements or in the notes when it uses the terms present or disclose to avoid any confusion. The DP seeks comments on these views. Section 4, Location of Information, considers surprisingly, the location of information, the IASB has heard that that information duplication and fragmentation can make financial statements less understandable and difficult to analyse. The discussion paper considers two situations when this can happen. Firstly, when IFRS information is disclosed outside of the financial statements, and secondly, when non-IFRS information is disclosed inside the financial statements. For the first situation, the DP suggests that a general disclosure standard should include a principle that an entity can provide information that is necessary to comply with IFRS outside of the financial statements if the information is provided within the entity's annual report. The location makes the annual report as a whole more understandable, and the information is clearly cross-referenced. For the second situation, when information identified as non-IFRS information is placed inside the financial statements, the DP suggests that a general disclosure standard should not prohibit an entity from disclosing non-IFRS information in its financial statements, as long as such information is clearly identified as not being prepared in accordance with IFRS, and the entity explains why the information is useful and has been included in the financial statements. The DP seeks feedback on the IASB's preliminary views for dealing with these two situations. Section 5, Use of Performance Measures in the Financial Statements. The IASB received feedback that some performance measures in the financial statements provide misleading information. Overall, the IASB has heard that performance measures provide useful information as long as they are fairly presented. The discussion paper dedicates a session to discuss whether a general disclosure standard should include additional requirements regarding fair presentation of performance measures in the financial statements. It is important to highlight that the DP does not include a comprehensive discussion about performance measures presented in the primary financial statements, because this is a matter that is being considered in the primary financial statements project. However, the IASB is using this public consultation to seek feedback on two issues that will supplement its project on primary financial statements. Those two issues are the presentation of unusual or infrequently occurring items and the use of EBIT and EBITDA. So earnings before interest and tax, and earnings before interest, tax, depreciation and amortization. In relation to the fair presentation of performance measures, the DP suggests that a general disclosure standard should require performance measures be no more prominent than IFRS information, reconciled to IFRS measures, clearly labelled and relevance explained, neutral and consistently measured and presented over time, and accompanied by comparatives. The DP includes a question to seek feedback on whether a general disclosure standard should describe how performance measures can be fairly presented in the financial statements. Section 6, Disclosure of Accounting Policies. This section considers concerns that the IASB has heard around how accounting policies are disclosed in the financial statements, including that entities often don't distinguish between accounting policies necessary for users to understand the financial statements and other accounting policies. The discussion paper considers guidance to help entities provide users with more informative accounting policy disclosures. The discussion paper suggests that only accounting policies that are necessary for an understanding of the financial statements should be the ones that are required to be disclosed. More specifically, an entity should be required to disclose accounting policies that relate to material items, transactions, or events, or where material items, transactions, and events where there has been a change in accounting policy, an accounting policy choice made. So, for example, selecting between the revaluation model or cost model under IAS 16. An accounting policy has been developed in accordance with IAS 8 in the absence of a IFRS standard on an issue, or the policy requires the use of significant judgments or assumptions. The discussion paper suggests that entities should not be required to disclose accounting policies that relate to items, transactions, or events that are not material. The discussion paper also seeks feedback on where disclosures of accounting policies and significant judgments and assumptions may be located in the financial statements. The IASB's preliminary view is that there are alternatives for locating accounting policy disclosures, such as in grouping them all together in one section, an accounting policy section, or to align the accounting policies with the related note disclosure. So for example, an accounting policy for property and plant and equipment alongside the property, plant and equipment note. The IASB's preliminary view, though, for disclosures of significant judgments and assumptions is that those disclosures should be made adjacent to the related accounting policies unless the entity judges that another location would improve the understandability of the financial statements. I'll now pass you over to Lisa, who will discuss sections 7 and 8.
Thanks, Dave, and good afternoon, everyone. Sections 7 to 8 of the DP contain proposals on principles to improve disclosure objectives and requirements in IFRS standards. So, what is the problem? The DP acknowledges entities need to exercise judgments about what information to communicate to the primary users of their financial statements. The feedback the IASB has received through previous outreach suggests that IFRS standards make applying judgment hard because some standards lack clear disclosure objectives, making the purpose of some disclosure requirements unclear. Applying judgment is hard because some disclosure requirements use overly prescriptive language, for example, shall disclose and at a minimum, which encourages the adoption of a compliance or checklist approach to disclosure. There are also some inconsistencies and unclear relationships between disclosure requirements and IFRS standards. Where IFRS standards do contain disclosure objectives, those objectives have largely been developed in isolation. Section 7 of the discussion paper suggests that disclosure objectives could be improved if they are developed using a common basis, for example, on the basis of a single set of disclosure objectives, rather than focused on individual standards. The IASB's preliminary view is that it should develop a set of centralized disclosure objectives that consider the objective of financial statements and the role of the notes. The centralized disclosure objectives would be used by the IASB as a framework for developing and organising disclosure objectives and requirements and standards. The IASB's preliminary view is that centralised disclosure objectives would be included in a general disclosure standard. The discussion paper explores two possible methods for developing centralised disclosure objectives. Method A is focusing on types of information. The first step would be to identify the types of information useful for users of financial statements. For example, information about the reporting entity, information about risks, or information about methods, assumptions, and judgments, to name a few types of information. The other method, which they refer to as Method B, focuses on the entity's activities. The appendix to Section 7 provides 2 examples of using Method B to develop centralised disclosure objectives. The example 1 shows a possible disclosure objective and requirement for operating capacity developed considering the entity's operating activities. The second example shows a disclosure objective and requirements for restricted assets developed considering the entity's financing activities. Both Method A and B are in the early stages of development, and hence the IASB has not formed any preliminary views about them. The discussion paper seeks feedback on whether the IASB should develop centralised disclosure objectives, and it also asks constituents which of the 2 methods identified for developing centralised disclosure objectives would they support. Section 8 of the DP describes an approach that has been developed by staff of the New Zealand Accounting Standards Board for drafting disclosure requirements and IFRS standards. The main aspects of the approach are that disclosure objectives be included. There is an overall disclosure objective for the standard, which is linked to the objective of financial statements and role of the notes. There are also specific disclosure objectives for each type of information. So this would be aligned with Method A, which we discussed under centralised disclosure objectives. The NZASB staff have identified 7 different types of information for which they have developed disclosure sub-objectives. The sub-objectives explain why users need particular types of information. Another aspect of the NZASB staff approach is that there are 2 tiers of information. There is a summary, or Tier 1, whereby you select types of information to give an overall picture of the item or transaction. These disclosures would always be disclosed, subject only to materiality. This would give some consistency and comparability across entities. There are then the additional, or Tier 2 disclosures. These disclosures ensure that all types of information will be covered, but it's based on the relative importance and amount of judgment involved in accounting for an item or transaction. This enables flexibility to exercise judgment and discourage the inclusion of boilerplate information. For some entities, the Tier 1 disclosures would be sufficient to meet the disclosure objective. Other aspects of the NZASB staff approach is the emphasis on the use of judgment. There would be a use of judgment section either in each standard or in the general disclosure standard. It will cover the relative importance of an item or transaction to the entity and the amount of judgment in accounting for an item or transaction. The final aspect of the NZASB staff approach is the use of less prescriptive language. For example, the Tier 1 disclosures use an entity discloses, and the Tier 2 disclosures use examples of information that the entity considers disclosing include. Timeline of the project. The discussion paper has a 6-month consultation period with comments due to the IASB by the 2nd of October 2017. We have worked back from the deadline to the IASB to develop our own project timeline. Submissions closed to the NZASB on the 18th of August 2017. To assist the NZASB to provide comments to the ISB and to assist our constituents to provide comments to us, we're holding outreach events in June. We're holding 3 outreach events in the main centres, Wellington, Christchurch and Auckland. The format of these outreach events will include a presentation on the DP from ISB staff via a video link. There will be roundtable discussions on particular questions from the DP, and invitations to these outreach events will be issued shortly, or will also be available on our website under the Information Hub. On our website, you'll be able to find a copy of the POD DP and also a snapshot document prepared by the ISB. This is a useful summary of the POD disclosure paper. We'd really like to hear from you so we can represent New Zealand constituents' views to the ISB. We welcome feedback both formally and informally. You do not need to comment on all the questions in the DP, but feel free to select those that are most relevant to your entity. Does anyone have any questions for us today? Okay, so far we haven't received any questions. If you have a burning question you'd like to send through to us now. Okay, well thank you for joining us today. Oh.
We have received one question, and that question asks, how will the guidance in the DP overlap with the guidance on non-GAAP measures issued by the FMA? So the guidance as part, or that's mentioned on performance measures in the discussion paper, as I mentioned earlier, will be discussed in more detail as part of the ISB's project on primary financial statements. But this discusses the use of performance measures in the financial statement, where the FMA's guidance is focused on the use of non-GAAP or alternative performance measures outside of the financial statements. We've also received another question in regard to the sharing of the presentation or availability of a recording of today's presentation and the slides. These slides will be emailed to all participants tomorrow, and they'll be available on our website. Okay, so thank you for joining us today for this webinar. We hope to see you all at our outreach events. Thank you.